The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Welcome to the show today, folks, from the offices of Duke & Duke, 100 South Broad Street, Philadelphia, Pennsylvania. We are going to take a look at the German DAX this morning. I posted the hourly chart showing you the downtrend that's been occurring for the last several days. But then I've also posted the other chart, which is the daily, showing that this is just a very, very minor correction from a large ABCD pattern that formed back on March the 23rd. So even looks extremely bearish today on the long-term chart. It doesn't look that bad at all, but, that's still early. Now, I've posted into the Den an article by Tom Hugard. It's 25 pages of the best material, frankly, that I've read since Mark Douglas passed away. It's about trading. It's inside his head. And it's really an incredible piece, folks, about what he does, how he does it. And it's a really incredible 25 pages. I really suggest that you print out the pages and study them, because it's that good a material, folks. It really is. It brought goosebumps to me. I know Tom very well, of course, and so I really respect his work, and this is a chance to get inside the head of somebody like him, and he does it, very, it's just a really great piece. So take a look at it. If you belong to the 24/7 family, I've already emailed it to you, and if you happen to be one of my students, I also emailed it to you to take a look at it. One of the things that I'm hoping to plan here in the next 3 or 4 weeks is to have another full-day trading session, 5 hours, and my goal is to get Tom Hugard as a guest, and also Jim Twentyman. I've been trying to get Jim on the show for years, and he doesn't like to come on because he feels that people just don't do the work that's necessary to be a trader. But yesterday changed for some reason. Well, I know the reason. Saturday there was a World Series game, and Jim is a big Dodger fan, and as is my grandson. My grandson is a huge Dodger fan, and ever since he was a teenager, and he basically saw the pictures of his mother and the players and stuff when they were. He doesn't remember the players, but they. She saw what a big fan my daughter was of the Dodgers, and so he became a Dodger fan, and the game was quite exciting. It ended very erratically, and the Dodgers lost. But Twentyman called me, and he was reminding me. He said, "Do you remember 1977?" He says, "We were at Drexel, and we went to the 77 World Series in Los Angeles, and Tommy John was one of the best pitchers in baseball at that time. He just got his Tommy John surgery done, and he'd won 20 games. And I think he was 20-5 or something like that. He had a fabulous year, and he was pitching. And unfortunately, they were playing against the New York Yankees with Reggie Jackson, and that's when Reggie got the nickname Mr. October, because he hit so many home runs. He didn't hit any off Tommy John. He got a couple of hits off Tommy, but he didn't hit any home runs. But we went to all the games in Los Angeles, and one of the games in New York, I took the family back, and Twentyman went with us. And we went to see, I think, one of the games in the Yankee Stadium, and so it was really exciting. And he was just telling me, how much he enjoyed that. And I said, "Okay, wise guy." I said, "How about coming on, trading with me for some trading, and we'll do it live." And he knows Tom also, and he said, "Yeah." He said, I guess I could do that." And he said he could talk about harmonic numbers and the stuff that he learned about W.D. Gann. I gave him a year off when we were at Drexel in 1980 to study Gann. Well, it was about 8 months. He worked with Jerry Baumring over at the Investment Center bookstore, and those guys studied the GAN stuff for a very, very long time. And of course, Jimmy will share with you, what he learned, during that time. Okay, folks, I want to bring the FTSE chart up so you'll be able to see it also, because it's a chart that's had a pretty good rally today, considering what the DAX had been doing. Get this up here so you folks can take a quick look at it. Yes, Mixture October, number 44. Actually, Reggie he has one home in Scottsdale, folks. So I've seen him several times over the years. He actually plays poker up there at the Talking Stick resort. He plays Texas Hold'em, and he wouldn't recognize him because he's an old man now. He's 75, I think. But he went to school at Arizona State. That's where he played baseball and used to play here against the Arizona Wildcats when he was just a kid. That's going back into the 70s, but that's a long time before I lived here. But he is an incredibly nice fellow, and he happens to be a very good friend of Tommy John. And one of the reasons Tommy became a Yankee after he left the Dodgers in 78 was because of Reggie Jackson. Jackson said, you should get this guy as a pitcher, and so Tom pitched for the Yankees for quite a few years after being in the majors for 26 years. Let's move on to the stuff that you guys want to hear, which is about the charts. Okay, folks, I want to share a chart with you from one of our friends over in New Jersey, and he sent me this chart, and he asked me to take a look at it, and I'm going to bring it up here and take a look at it. This is a chart of the TLT, I believe. I believe it's a TLT. Is that correct? Yeah, I think that's what it is. And basically, he asked me to take a look at it, and I said, well, it's very interesting. I said, but you've got a lot of lines on here that, I don't use. Folks, I've been doing this business since 1959. I did my first trade in Elastic Stop Nut in January of 1959. And the three greatest traders that I ever met never use any lines on these charts at all. The first one was Amos Hofstadter. I met Amos twice, in 1972 and 1973 when he was running Commodity Corporation. We didn't have charts like this, folks. Everything was done by hand on Commodity Perspective, but his Commodity Perspective charts had no lines on them at all other than maybe a trend line or something like that. There were no oscillators, no indicators, nothing like that. And he was one of the very greatest. But the greatest of all, even greater than Amos, was Frank Tauscher of the Super Traders Almanac in Tulsa, Oklahoma. He was by far the best. I mean, we used to have these contests back in the late 70s and early 80s where we had a contest to see who would win. You would get $25,000 or $50,000 of play money, and then you would trade against other traders. Well, Frank would never accept the play money. He used his own money. And folks, I know you're not going to believe this, but this is going to be true, what I tell you next. He won every single contest. And not only that, in most of the contests, he made more money than all of the other contests, all the contestants combined. That's how good he was. And all he did was basically he looked at simple lines. He had no oscillators, nothing. He had a trend line here, a trend line there, a mark here, a mark there. But as far as oscillators or moving averages, Frank never did any of that, and basically he reacted to what the lines are. Now, we got a break coming up here. When we get back, I want you to take a look at this chart and look at the far right there where you see these white swing lines. We want to watch those. We'll be right back, folks. 877-927-6664.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, Taz understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the Taz Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the Taz Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, we're back, folks, and I posted that chart again from our friend Jeff out there in New Jersey. We're doing this for you today, Jeff, so I certainly hope you enjoy what I'm trying to show you here, because it's quite simple and you don't really have to be a rocket scientist to do all this stuff. He also sent this thing called X-ray specs, which is a thing for looking at things. I don't know if he was joking with me about that or not, but I posted it anyway, just for the heck of it. Just remember those two white lines that we saw on Jeff's charts. What I'm going to do now is to draw my lines in here. This is the same lines that he's looking at, only all I've done is I've put them in on an hourly chart, and I want to get it up here, and you'll be able to see here that all we're looking at here is an ABCD pattern down there at that right at that 172 level, and we got down to 171.22. We put a buy signal there at 171.24. Fortunately, it got filled. It's had a nice run here, and that's all that was, folks. I mean, that was nothing more than a simple ABCD pattern. When I look at these things, I look at them and saying, okay, this pattern is complete. How much do I have to risk to see if it's going to be right or not? And that's all I know. And I know one thing. I don't do all the other things that that I usually do. I do want to make one correction here with Amos Hofstetter. Amos, we had, this was long before we didn't have these chart stuff until 1982, 1983. We're talking, I met Amos in 72 and saw him again in 73. He was killed in an auto accident in January of 75 down in Sarasota, Florida. But all he had on his Reuters machine, and that all they had was numbers. There were no charts or anything like that. But he had a little plastic plaque that he had made, and it basically said, "Has your opinion of the market changed? Yes or no?" And the second was, has the market reached your target? Yes or no? And the third thing in the bottom was, if you can answer yes to either one of these questions, you can exit your position. If not, stay pat. And that's what it said. And that's what he did. And he would trade long term, 2, 3, 4, 5, 6 months he would be in things. So that's the main thing. Now, Frank was totally different. Frank Tauscher was totally different. He was more of an active trader, but he just used patterns. That's all he used. He didn't use anything other than that. And when he wrote his Super Trader's Almanac, he would tell people, keep it as simple as possible. But Frank was with his son. It was about 25 years ago. They were in Tulsa getting ready to go to lunch, and they were standing at a street corner, and he was talking to his son, and he didn't even get to finish his sentence. He had a massive abdominal aneurysm, which means the biggest artery in your body exploded and you die instantaneously. He didn't even get to finish his sentence. But he was one of the finest human beings I ever met, and my goodness, was he philanthropic. He was a Baptist, and boy, he sure gave a lot of money to the Baptist church. He was a very, very religious guy and a really super nice guy. Anyway, that was Frank Tauscher, the Super Trader's Almanac. In fact, that's how Jack Schwager started the Super Trader. What was it called? I can't remember what they called it. Whatever his thing was. He learned it from Frank Tauscher. To do that. What was that called? Help me out here, folks. Jack Tauscher. Market Wizards. There you go. Absolutely correct. Yeah, that's exactly right. There was Market Wizards. Okay, let's move on to a couple things here. Now, speaking of Market Wizards, let's take a look at one here. We're going to get this up here. This is I'm going to get this up here and take a look at it. This goes back a long way in time, folks, even before the old cowboy was trading. This goes back into the 18th century. You'll see the 1719 down there. You see that gold arrow? That's when Isaac Newton started to buy a stock known as the South Sea Company. And you'll see how he held it from all the way up to got to be $600 a share, and he sold it, okay? And then he watched it to go all the way 600, 700, 800, 900 and some, almost $1,000 a share, and he couldn't stand it anymore, and he went back in and bought it again at 0.3, and he wrote it all the way down to $50 a share and lost almost his entire fortune. He was nearly bankrupt after that 3-year area. He had lost so much money. And so this is what you got to remember, folks. It's not how much money you make, it's how much money you don't lose, and you got to focus on that. That's the thing that you got to really spend very, very close attention to. And that's why I've put into this room today this article called The Best Loser Wins by Tom Hugard. And the best loser wins means the difference between a professional and an amateur in trading is the professional realizes when he's made a mistake quicker than the neophyte or beginning trader. He recognizes that earlier. And that's what you have to do, is to keep your losses small, let your profits run. I know they say that all the time. Easier said than done, but that's neither here nor there. So what we want to take about it. Now, I know you guys don't want to hear politics, but by golly, we're going to bring this up here for just a second here. This comes from I believe it's from Larry Williams. Someone sent it to me over the weekend, but it's a real interesting chart just to show you elections and how they react. Now, this is going back, quite a few years. You can see the Obama, you can see the Clinton years. Clinton was a huge run here because we had that we had Greenspan in there, and so it was very, very bullish during that time. That you don't see anything of what's happened over the last few years with the guy that's running the country now. I can never remember his name, but you'll see the area of Reagan. We had a big run up during the Reagan years. But if you remember, when Reagan got elected, he was hated not as much as Trump, because everybody hates Trump more than anybody else. But Reagan was not very popular. He wasn't popular until 1984 when he had his second. So the main thing, and that was the main thing. So remember that when he got elected, he wasn't even supposed to beat Jimmy Carter, but he did. And I remember that. In fact, Jimmy and I were talking about that yesterday. That November election, Jim had been playing in a blackjack tournament in Las Vegas. And so I rode over with him to help him drive back and stuff. And we had just left the the hotel. I think it was the Bally or the MGM. It might have been, yeah, it was the Bally Hotel, and we had only left that hotel by about a day, and it burned. It burned. It killed 20-some people, and that was the hotel we were staying at. And so, when the election came in, the market rallied a little bit, and then sold off for almost 2 years, because the bottom was in August of 1982. So you're talking 2 years into the administration. And then from 1982, from August 9th of 1982, it never stopped going down. It still hasn't stopped going down. So that's it. You'll notice in the Bush years, that was the weakest of all the group. And so that's mainly because of what was happening with the other political stuff that was going on. And anyway, we'll keep an eye on this as we walk through. So don't be afraid of the elections. There's going to be more volatility, and hopefully we'll be able to go on and see what happens. But remember, folks, these folks that wrote these rules called the United States Constitution, those 55 guys, mainly it was Thomas Jefferson and Abraham Lincoln and Adams. Let's 877-927-6648.
Larry Pesavento watches the markets 24/7, and now is a great time to try out his daily trading service, Fibonacci 24/7. Larry publishes videos and charts for subscribers throughout the week when warranted, and every weekend he puts out a thorough report covering worldwide markets, futures, commodities, and currencies with Fibonacci retracement levels, possible trading setups and zones, and stops and targets for all recommendations included. Larry applies the principles he's developed over decades of trading while analyzing a variety of markets for subscribers. To see for yourself the types of videos, charts, and analysis that Larry provides for his subscribers, sign up for Fibonacci 24/7 today by visiting the front page of TFNN.com under the newsletter tab. You'll also gain instant access to Larry's archived subscriber webinar from earlier this year. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today. If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I posted a long-term chart going back into the 60s of 1960s of the gold. I don't know who the gentleman is, but the chart is correct. And basically, he's saying that, we're going to go a lot higher, which I think we are going to go a lot higher, but I don't think we're going to go a lot higher right away. Now, the dates on that is what's so important. If you remember that time during the late 70s, early 80s when gold topped at 860 back in 1980, and then it went down for 20-some years. As you can see here on the chart, it doesn't look very much, but it bottomed in around 2001 at around $250 an ounce, and now here we are trading at $1,900 an ounce here today. I'm going to post what I think is going to happen in the gold market. Remember, folks, these are just charts. They're nothing related to the fundamentals or anything like that. You'll be able to see here that I believe we're heading down at least another $100 lower down to this 1810 level. There's three major targets down there. That would be down $290 from the high that we made up at 2090 way back on August the 3rd. So that's what I'm looking at longer term. This will all change if we get above 1950. If we get above 1950, which is $50 away from where we are right now, this would all be different. But until that happens, I'm not even sure that I'm right or not. I'm just looking at patterns. And believe me, it's been, gold trades off these numbers incredibly well. And so you want to make a really good attempt to try to stick with those numbers and ratios. And that's what really I'm doing here. I mean, I know you get a little bit bored hearing all this stuff or not, but we'll take a quick look here. We have some information here from Mr. Z telling us that this coffee that we were looking at over the weekend is a beautiful pattern down here exactly at the 78% level. You can see that key support level there at 104. Below 104, you don't want it. But right now it looks like the coffee is starting to move higher. And it might be turned into a good trade, but, we don't know if it's going to or not. But, the good part, folks, nobody else does either. That's another thing that you got to remember. It's just you against yourself out there. You're your worst enemy. And so if you don't protect yourself, you're the one that's going to pay the price. That's the main thing. I want to mention one more time because I think it's this important. The article that I posted in here, the room today, The Best Loser Wins by Tom Hugard, is probably one of the best articles I have ever written on trading. It's about how he looks at the market. And that's just one person. There's a lot of ways to skin the cat. Well, I shouldn't say that. Otherwise, the ASACP will be after me. But it's a different way of looking at the market. So he does a great job at it. But, maybe you won't like it. But I highly, highly recommend that you do. That's the main thing. Now, I do want to share with you Mr. Z, who's always got some great information, shared this with everybody over the weekend, which would have been a very, very wonderful trade to look at. And that is from Tom DeMark's sequential system. You'll see here, he posted it October the 16th. You'll see here, this is a weekly chart, I believe, and you're seeing here that this thing has just made a sequential sell, and we're down over 3% today in the DAX. I mean, that's a big drop. So I think it's important to pay attention to this because if this is correct, we could see it move all the way down to 8,500 and it could still be bullish. So we'll see how that one works out. But these are some of the things that you get when you belong to the Tiger Den. They post some of these really good things. And plus the trades that they look at during the day are also very good. So that's the main thing to take a quick look at some of these things as you start your trading day. Okay, now let's move on to something else that someone asked us about in the futures market, and that is the sugar market, because we're looking at a potential here in sugar. It's not very far away. It's only about a penny and a half, which is about 10%. But you'll notice all the ABCD patterns that are here. Here again, folks, you don't have to use a lot of oscillators and stuff. Just do some simple time counts. Look at the ABCD bottom back in September. Now, this is a weekly. And if you counted the number of weeks from highs to low, it tells you that should have bottomed sometime in September. So where was it in September? It was setting in a perfect ABCD pattern, okay? And not only that, but the ABCD was equal in price and time. In other words, the number of weeks down in the AB leg was equal to the number of weeks down in the CD leg. So all you have to do is count. Okay, down 12 weeks, down 12 weeks, and then boom, what happened? You had the big ABCD to the upside. Now look what we have going now. We had the 382 support that we had back here in August. We pointed that out very much, and look what happened after the 382 report. Support, folks. Look at that huge week that we had. We went from 1170 to 1320. We're up 12% in 1 week. Boy, if that's not telling you the market wants to go somewhere, nothing else will. And now we've broken through the 78% level last week, and we're heading up to looks like a double top, which is a perfect ABCD, and that comes in around 15.90 to 16 cents per pound. So that's really what you're trying to do when you're doing this. It's not that difficult. And just to give you a quick, just a little primer. Look, if you're new to this, you can pick a stock like Apple or Facebook, any of those stocks, and take a look at it. But if you want to really learn the stuff, is to take the euro versus the U.S. dollar, and just look at that one, folks. I mean, that outlines what these numbers are doing every single day. Sunday night, the market was setting exactly at the 78% level. What did it do all night long? Went all the way down to the 78% level of the low on Friday. That was like $600. I mean, but here you got something that moves $600. That's certainly acceptable for risk if you only want to risk a couple $100. But just check the euro, how well it works. I mean, it just follows these numbers like clockwork, and it's the largest of all the things that we trade, folks. I mean, there's nothing that trades any more than the euro. The euro is, this is $1 trillion market every day, considering what the stocks are. That's virtually nothing. Okay, so pay close attention to it. Now, I want to go back one other way and to get to talk to you just a little bit about these Treasury bonds, because they are at such a critical level here. I want to get these up here so we'll be able to see it here. We'll do the notes first because they're the really big daddy rabbit of the group here. But here's where we were on last Thursday with the Treasury notes. We were setting right at the 61% retracement from the low of June. The low of June was exactly 50% retracement from the low in March. It was also exactly a 38% retracement from the low on March the 20th. So we had two major ratios setting there at 618 and 382. Now the bonds went below the low of June, so they took that out by just a little bit. But the notes, which is the largest of the markets, there's no commodity market any bigger than the Treasury notes, because that's where you get your credit card information, your automobiles, your mortgages, all that stuff comes from the rates on the Treasury. Well, I shouldn't say that, because they're going to charge you whatever that rate is. They multiply it by 24 times and charge you 24%. But that's how they calculate what those ratio should be for your mortgage and your car loans and stuff like that. Credit cards is totally different. That's a legal way for them to rob the poor and give to the rich. But let's move on to a couple other things that people have asked about, and that is the cattle market. And we're going to cover cattle when we get right back.
Hi folks, this is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The gold report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The gold report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The gold report comes with a 30-day money-back guarantee. Go to TFNN.com and order the gold report now. Protect your buying power. Order the gold report now.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL SPUU or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
Okay, we're back, folks, and I posted a chart of the cattle. You can see here we're down there, really strong support here at this $1 a pound. So pay close attention to that one. But remember, it has virtually no bounce here for the last 2 weeks. So there's been a lot of selling coming in. On a programming note, try not to miss Wednesday's show, folks. The 28th, we're going to have Joe, Mr. Fibonacci himself. Joe DiNapoli will be on. We're going to give him the whole time, because he's got some great stuff, and we only had him on once a few weeks ago. So Joe will be our guest on Wednesday to pay very, very close attention to that show if you get a chance. I highly recommend that. Now, I wanted to take just a moment here to talk about the stock market here. Here is what I'm looking at, what I think may be happening. Let's just get this up here to take a look at it. This is the E-mini S&P. It's an hourly chart. You'll see that red arrow that I pointed there. That was the rally after the opening. You see it went down last night and then rallied back a little bit. And now we're down here to this key level of 3,400 again. But I think we're going to get down to 3,330 sometime in the next week or two. That's just my own personal guess. You can see here the downtrend line since October the 11th. Each one of those retracements was exactly 61% retracement. The one we had on Friday was a 61% retracement of the high on the 16th. That was at 3460. I know you can't make this stuff up, but that's what's happening. We're having a good rally this morning. People are out there looking for bargains, of course. When the Dow's down 354 points, they are finding bargains, and so that's what's making the market rally here early this morning. So watch that one very, very closely, folks, because I think that's where we're going to go. So we'll probably have probably be a no surprise here that Mr. ex-Vice President, Mr. Biden, looks like he's going to be the hands-down winner, because that's the way it looks like from the polls. And we know these polls, guys, they never are wrong. And so you want to pay very, very close attention to that. And also take a look here at the Bitcoin. You'll be able to see here that you have the breakout that we were expecting. We're almost at the profit target now, which is 13,500. We're at 13,000, so only 500 points away. Then watch for another little correction. But folks, you realize now that we are more than 70% back from the high that we made at nearly 20,000 2 years ago in January. So this is not a bubble. It's never been a bubble, and we never thought it was a bubble. So these cryptocurrencies there's something happening with cryptocurrencies cryptocurrencies and blockchains. What it is way beyond my pay grade, but just looking at the charts, you got to pay close attention to it because some people with a lot of money are buying this stuff. And, with PayPal coming in and saying, yeah, we're going to start taking it, shut the front door. What are you going to do? You're going to be able to see what happens. Anyway, we'll be watching to see what's happened. All I know here, the lines here in Tucson, Arizona to vote are like nothing you've ever seen before. It's like they're giving free marijuana out, so whatever that means. But there's a lot of people voting. What was his name? Mayor Daley from James Daley from Chicago said, vote early and vote often. Okay, let's move on here to one of the other things that I wanted to discuss here. We talked about the stock market. We talked about the Bitcoin. And hold on here, we might have a question coming in, 877-927-6648. Okay, Mr. Z is saying, is it possible that the gold bottomed at 1851 on September the 28th? Yes, Mr. Z, it is definitely possible. Let me show you why I think we're still getting ready that we're still moving towards lower prices. But let me bring this to your attention here. We'll be able to see it together. It's not a hard thing to watch. So let's get up here, take a quick look at it, and we'll be able to see here. Okay. Okay, here is what Mr. Z is saying on the 23rd of September. If we made the ABCD pattern there at 1850, because we did take out the lows of August, and then the reason why we've rallied up here. So this is a 4-hour chart now, Mr. Z, and the reason why I think we're still going lower is, look, that's the 22nd of September, and here we are into the 26th of October, and we can't even take out the 61% retracement at 1933. So if we can take out the 1933, then the answer to your question, I think, is yes. But I still think we got a chance to get down to that 1803, 1810 level. If you look there in August, there's the big ABCD measures to 1816, and that would be the biggest ABCD correction we had since this market started higher back in December of 2016. So I do believe we're going higher. I'm anticipating, I hate to use the word hope, but I'm anticipating we're going to get down to that 1800 level. The rally we had last night was none other than a 382 retracement up there at 1908 or so. So there should be resistance between 1908 and 1910. So whether that's going to remain high or not, I don't know, but we're trading at 1905 right now. So that's what we're basically paying very, very close attention to. Now, the Dow Jones is still dropping here today, and I wanted to bring this pattern up to you in the Dow Jones because it's going below the level, but it's certainly a good pattern. We'll get this from one of our friends over across the pond because you'll see the multiple ABCD patterns that are forming here in the Dow Jones on this hourly chart over the last 10 days. But folks, this is the Dow E-mini, and we're below the end of this range. We're trading at 27,800 and change right now. So we've broken below those levels. Now it's a really good ABCD down there, but it's below it. So you can't try to catch a falling knife. So until this market collapses, look at this. We've had a 100-point rally in the Nasdaq, and the Dow continues to go down. I mean, that's why you're looking at different markets. The Dow is only 30 stocks. And they're price weighted, whereas the Nasdaq is cap weighted, and that's basically 10 stocks. That's overshoots the Dow by, I don't know how much bigger it is, but I know it's huge. So you're looking at different things. So you got to trade them separately, for heaven's sakes. I mean, they're different markets, so you have to trade them separately. So, Mr. Z, get back to your question. The answer is if we get above 1940 in the gold per ounce, then I would say, yes, we're probably on the way. And what you want to watch for is if it moves, you want to see it moving in a direction where it goes really, really fast. In other words, moving between 1905 and say 1950. If it happens really quickly, then that would be an idea that you would be really close to something that would be really, really spectacular to the upside. Now, we should look at one other thing, Mr. Z. when we're looking at the gold market, and that is we want to be watching the gold miners index, the GDX. I'll get this up here because it's a really good indicator of what's happening in the gold market. We'll post this up so you can see it. We focused on this when we hit the 61% retracement back on the 21st. You'll see we made that beautiful Gartley up here back on October the 13th, and now, we're heading down. We're basically unchanged today so far, but I think that ABCD would lead us down to that 34 level, down about another 10%, which would be pretty much what we'd be looking for in the gold market. So that's what we're watching. Here with this GDX, though, should we get above $42, that's $38.63 right now, but if we get above 42, that's telling us that, yeah, gold is probably going to go. But this thing, gold will be going a lot faster than this thing will. So you got to pay attention to the gold at $1,940 an ounce.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as...
Whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step-by-step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I want to take a moment here to remind everybody to read that article that Tom Hugard wrote, The Best Loser Wins. If you don't print it out and read it more than a couple times, you're doing yourself a great disservice. But if you don't make any mistakes and you're absolutely perfect, then you probably won't need it. But you don't get to get inside of the mind of somebody like that very often that's written so perfectly, because it's really a spectacular 25 pages, folks. It tells a little bit about Tom, but how he does it, and that's what it's all about. He doesn't use oscillators and stuff. He just basically, just reads the lines as he sees them, and that's what it's all about. I wanted to spend one more time on a market that we're watching very, very closely, and that is this natural gas market. This happens to be the December contract. You'll notice that we made this huge ABCD pattern up here. You have a triple top pattern there, as you can see. You had a top there in August, one in September, another one in October, all roughly the same price at around 333, and we're trading at around 322 this morning, and we want to be watching for a pullback here or a breakout to the upside above that, because if we get above that 336 level, that's a lot of supply, folks. And if we can bust through that supply after that short correction that we had here in the middle of October into the 28th, that was nothing more than a 50% retracement of the low in June and exactly 382 from the low back in March. So that's an incredibly important bottom there at 294. So breaking above that would take it to a higher level. Now, that would mean that natural gas is going to go higher, which means that fracking is probably going to stay in the economy, which some people say it is, and some people say it isn't. So we'll have to do one thing at a time. Folks, do something nice for somebody that has a lot less than you. You can catch me at Larry at my GoFundMe page. We're always happy to take donations, especially now that we've got the winter season coming in for Gulfstream Park down in Florida. Anyway, let's move on and see you folks tomorrow. May God bless.